Here we have the 1 hour price chart for Apple Incorporated, stock ticker AAPL. Here we can see that the stock had a very strong week last week. We're sort of moving higher in another leg, sort of making another leg higher after posting these very significant upside breaks over the last few weeks. Many arguments can be made about whether or not this makes a lot of sense. There really wasn't any fundamental news that kind of initiated this breakout, and it is a strong breakout and with follow through. Let's just be very clear about that. But there really wasn't any fundamental news supporting all of this upside activity. We did have the Worldwide Developers Conference that kind of initiated a lot of this. I mean, this is really when this was taking place when most of these prior rallies started to occur. Um, but there really wasn't any news that came out during this period that really would have supported the outlook going forward for Apple. I would even argue that it could have been the opposite because Apple kind of acknowledged that they were thinking about working with OpenAI as a resource for its AI product offerings rather than developing some AI software applications on their own. It's really kind of ridiculous. I mean, Apple is such a huge company. They should be able, to devote some of their own attention to this rather than just giving the iPhone a new camera every few years. Um, so there really wasn't much to explain this, other than the fact that this was really a purely technical breakout. And it's the type of thing where you really need to be watching the price charts in order to see these things developing, predicting whether or not they're likely to happen, probable to happen. We're not making any predictions here, but we're trying to identify what is most probable in any situation. Um, but it really is a very good example of why it's so important to watch the price charts. Because there was no fundamental news really that supported this. I mean, this was really just a breakout of prior levels that caused a lot of people to kind of jump on board. They were probably worried about losing, an opportunity with an Nvidia type move where the stock just skyrockets. And people didn't want to miss out on the potential there for gains, and we just kept running higher, fueling these gains higher, pushing through important resistance levels. The real breakout here did occur just above the $200 mark. There are some comparisons here that should probably be drawn with Amazon because we're seeing some really some different, kind of a tale of two stocks kind of a situation here where one is just, breaking out and seeing massive breakouts, and the other is kind of just stalling out sideways after these breakouts occur. So currently with Apple, what we're looking at here is, the question is, should we start buying? Is it too late to buy? In my view, it really is too late to buy here. I think that you have to wait for potential pullbacks. Um, it's mostly due to the fact that this wasn't caused by any major fundamental development, and we're becoming overextended here. I mean, as we can see, this would be the 1 hour chart. So, here we have moved into overbought territory. It's not heavily overbought, so we could still extend from here. But the prospects for continued upside are somewhat limited, and we'll go over some potential upside targets here in a moment. But what this does tell us here is that the potential for upside is limited. That does not mean that I think that this rally is exactly over right now, due to the fact that um, the broader trend momentum here, as we can see, is clearly focused on the top side. We still have bullish momentum here. That's been around for quite some time, and continues the trend continues to remain in place as we're moving into overbought territory. We did have a bit of a downside trend momentum indication flashing on the RSI, on the hourly RSI, but we broke this trend. So this trend has completed itself right here. I can kind of zoom in here to kind of look at these here. So we had a shorter term downtrend here in the RSI, which has now broken, and we have a longer term trend in the RSI, which is still in place. So for all of these reasons, I do think that we could still continue, even though we're in overbought territory. It's not always the case that you see something like that, but as long as this underlying trend remains in place, the stock itself could continue to move further into overbought territory. But, I'm generally not in the practice of buying stocks like that. I mean, I would want to wait for a bit of a discount. Uh, so if the first level that I would watch to the downside is going to have to come in at this 2020 level. If you're trading on a very short term basis, I would probably watch that level. But from there, you're probably looking for a dip below 215. If you wait for maybe a drop to roughly 214.80, you will have some historical support zones in place. In addition to this purple line here, which is the 100 period moving average. This is the hourly chart, so this would be the average price of the previous 100 candles. So these two areas do come in roughly in line with each other. All of the exponential moving averages are continuing to move higher. This does suggest that we will probably see a little bit more upside here. But I have to think that we're topping out here relatively soon. I mean, there just wasn't enough of a basis for this entire move to continue in the first place. And if we're only trading on chart signals here, we do have to start looking at these readings like the overbought condition, and things like that to start to get a bit concerned about whether or not the current rally is sustainable. So whenever we're dealing with all-time highs like this, it does become more difficult to trade the stock itself or the asset itself because there are no historical resistance levels. That's what an all-time high is. It's its own resistance level. There are no further resistance levels to the top side because the stock has never traded this high before. So if we pull out here to the monthly chart, we can see that uh, you know we're currently moving into we're already moving into some resistance levels because we're currently hitting one of the top side targets in the monthly standard deviation price channel. I do prefer to use the standard deviation channels rather than things like Fibonacci extensions or projections. I think they're a bit more firmly rooted in current price action. So as we can see here, we're currently running into the upper end of one of the initial standard deviation channel. So this is another reason why I'm bullish on the stock. I mean, it is a bullish breakout, but I wouldn't really be buying here because I'm looking at potential downside rolling over from here. The initial price target here for the first standard deviation channel comes in at roughly this would come in at roughly 226. So from here, if we were to look at the following month, okay, so we're currently in July. So if we're looking at August, the upside price target here would come in at roughly 250. So there is a bit of a potential here for further topside. I mean, we could be looking at another $25 over the next month. But when you're running into a standard deviation price channel like this, the level of uncertainty that exists here is just too much. And I really wouldn't be looking to buy the stock just yet. Overall, if you're still long, if you're long the stock from lower levels and you want to hold your position, and wait for a break toward $250, I wouldn't really have a problem with that. But I would argue against probably establishing new buy positions at current levels. Instead, I would prefer to wait for a pullback, corrective pullback to the downside. So here's the current market analysis for Apple Incorporated, stock ticker AAPL.